Okay, I'm selling short here. S&P 500. It's about 333, so I'm expecting the market to move. I'm looking for a reversal trade currently, and as usual, please, if you send me emails asking about what these strategies, what the setup was, it's going to be the same answer. As I'm always using the strategies or trading methodology, one or the other that's discussed in the apex. Aside from that, I'm looking at market internals, and I'm also looking at volume, price action. Doing market intermarket analysis. So it's going to be the same answer. So please, those type of emails, it becomes kind of difficult for me to repeat the same answers. So just for anybody that's curious, that's what I'm always using. If it's trending market action, then it's possible that I'm using the Z Keltner strategies as well. So let me set up my stop. Now, it's a little bit too high of a. Alright, just. Yes, close it. Let's see. Okay. That's going to be my hard stop. It will not get moved until my first profit target is hit. Uh, and profit target is going to be below this swing point here unless I start seeing a lot of volume activity and price stalling. Then I will have to just pretty much flatten this trade out. What I'm looking for is for us to come all the way down to 1174.50. Okay, that's where I'm looking for first profit target. I would love to see price just cut right through that, but I think since there isn't much time left in the trading session until 1600, it's about 15:30 35 right now, 36. We're gonna actually, if it I'm correct, we're gonna see a big fast move down. It's not gonna be let's just move down. Here we go. Okay, so here comes the volatility. We're gonna see a big fast move down. If we can just break right through this, then there's no sense for me to uh, in other words, I'll take some profits here, but I'll look for us to move lower. Okay, this is the area that's gonna we need to push through with high volume. Okay, I don't want to see this bar move up to here. In other words, form a long shadow. I want to see as high volume just push right through that because that's a support level that was supporting the market, and now we're seeing some buying here. Okay, this is what I don't want to see. So it's just a matter of seeing what this next bar does. When you start seeing signs like this, things that you don't want to see, and you actually begin to see them, then it's time to reconsider your trade management. In other words, if this line can close up here successfully by the end of your interval, regardless if your trading interval, then what you're going to have to do is say, okay, buyers are coming in. This is a support level. What I want to do is protect my trade. So you would pull your stop down to here so you don't lose money. But you can see the opposite is happening. We're trying to push through that level, and we did push through that level. So now we've reached. Okay, this is one of the reasons why recording videos and trading is not recommended, because I just ended up, instead of taking profits there, I ended up taking profits a little bit higher. So in other words, it's costing me money, but that's okay. So hopefully these videos can help some people that are interested in trading, and that's fine. So now we're at break even. So what we're gonna do, this is critical support area. Okay, So if we can push through that level, then we're going to have a nice trade because we'll most likely push through the volume weighted average price also. If not, then you've made money on part of your position if you're short on this trade. Okay, and the rest you're hoping that you can get more out of, so you just leave alone. You leave it right now and you don't do anything. You want to see if you can catch a bigger move, because this is market internals were quite weak, and this is an area where reversals are going to pay off, and if it does move, then you're going to get a nice trade. And you probably traded. I traded in the morning, so I've already made some dough, so it's not a big deal. What ends up making money for traders is obviously proper trade management, but big trades are what actually end up giving you the profits. So we have this this previous support level up here, okay, around this area, which now is going to act like resistance. So you can use that as a gauge for this move. If buyers can push well above that, what's going to happen is we're going to come right up back up to here again. We want to see sellers start selling this level, looking for a continuation. So now price is going to get trapped between this area for a little bit of time. If that little bit of time ends up being a lot of time, then it's best for you to just get out of the trade, because that means we're just going to close the day into a consolidation, and we're really not going to move. This is the time of day where you get high volume. We're seeing that high volume come in. If price can't move on that high volume, then what it means is it's a locked market and we're just going to go sideways. Okay, so this is my cue to get out. We got locked in this area, so I'm just going to close the trade. Okay. So what essentially happened was, as I said, we consolidated exactly between the two support, and this is why it's so important to understand support and resistance levels, but not just every swing high, swing low. You have to get to a point where you understand what you're looking for, and in a sense, that's what the Apex is all about, teaching you how to read support and resistance levels. But that's just part of it. In any case, it's not important. What's important is for you to get to a point to you understand where support and resistance. This is where I had marked the support and resistance levels, the major ones. We just played a little ping pong in here, and then the bulls finally flex their muscles and push beyond that. Once they do that, there's no hesitation, no nothing for me. I know I need to flatten my trade, and that's what I did. I took about, on the first half I made some money, and on the second half I still had around 600-700, and you just get out because you know who's in. The bulls have flexed, have shown what's going on, so you just get out of the trade, take what you can, and then leave. Now, I was watching this trade at the same time I'm answering emails too, so it's possible that I could have gotten out a little bit earlier, but since I do multiple things while I'm trading, often I suffer. Like I chased the trade and then ended up not managing it as the way I exactly would like to, but that's the way it goes. So in any case, if you follow volume and price action, and then you always continuously ask yourself, why did this high volume come here? Why did it come in here? Why did it come in here? Why did it come in here? Eventually you will learn why this volume comes in, the high volume. High volume is always in reaction to support and resistance levels. And so volume will lead you to major support and resistance levels. The only challenge you're going to have, which with a little bit of thinking you should be able to move through that, is to be able to define what is high and low volume. And I would urge you to move beyond a moving average that has a look back input, because that's going to lead you down the wrong road.